So in this video today, we're going to be going through the live charts, demonstrating how you will look and find those areas of supply and demand. Now that's following on from the previous video, hopefully you've already gone through. Now if you haven't seen that video already, I'll leave a link above now for you to go through and watch the first video. I went through showing you, demonstrating how the basics of using the structure on the market with finding those zones and exactly how to draw them. But now we're going to go through to the charts and actually demonstrate that on the charts as well. So as I said in the intro of this video, I'm now going to go through on this price chart of the Audi USD and demonstrate exactly how you will look to apply those areas of supply and demand to your charts using the structure approach in the market. Now you need to understand, as we went through on that first video, and again if you haven't seen that first video, I do suggest going back quickly watching that first, because that'll show you the basics of what I'm now going to share with you on this price chart on this video. Now it's all about understanding structure in the market. And when I say by structure, I mean understanding the principle of that higher low in the market and that higher high. Okay, and we're understanding this with using these higher lows where we're going to be marking out those areas of demand, where we'd then be looking for the market to come back into for any buy trades. That is how you use supply and demand in Forex. Now this video is all about education, to share with you exactly how you look to draw those zones on the candlesticks on your price chart. So let's now go through and draw them on this chart. That's what you've come here to find out. And zoom in, so let's go back in time. So looking at this area of price, what you do first, we're looking for the market to rally to the upside. Once it breaks this previous high, we can then start drawing out our areas of demand. So your first area of demand will be drawn off this low in the market. Now in fact, you would actually draw it from that area, because if you had watched that first video, you would have understood that when you're marking out a demand zone, you mark it off the highest point of an indecision candle. If it was this bearish candle, then you mark the zone out like that. Let me just remove that off the chart again. Now let's just go forward a bit so we can see the full price. So you mark off this as your first demand zone. As you can see, the market does rally out, remove this high, comes back into that demand zone and then rallies back out. As it continues to go to the upside, we create a new structure high. The market pulls back. Again, here we pull back and then we rally out and we close back up. We just go back. So your next zone would be then marking from here. That's your next area of demand. And again, you do the same approach over and over. We have a new high. The market rallies up. You then mark out this area of demand. As you can see, the market does come back and test it. That's a simple process. You keep marking off the new highs and then you mark off the new area of demand. Now in a future video, I will go through what we call that rally base rally zone. This is just showing you the zones of the reversals. So as the market continues to do this, this is where we're marking those zones. They are the best location on the price chart where you want to find the market to pull back into. Just always remember, when you're looking to mark that zone, you're looking for those points where we see the swinging pattern happen in the market. Okay, so let's remove everything off the chart. It's going to go to this current price. Now there's an area on the chart where you look for that reversal. And remember, when I went through on the previous video, we looked at price creating this new high, dropping through, removing this last area of demand, where it then creates an area of supply. That is a reversal in the market using supply and demand. Now that's what I'm now going to quickly show you on this area. So you've been through understanding marking an area of demand with a trend in the market. Now you're going to understand marking an area of supply when we reverse. So as the market rallies up here, the market creates and breaks this high. It then breaks this smaller high and we create a new area of demand right there. Now eventually the market comes back and it breaks through that area of demand and it creates this area of supply. That is how you would look for a reversal. Understanding where that last area of demand sits, you wait for that demand zone to be broken, and again it's as simple as seeing this type of price pattern. You're looking for this previous area of demand with market structure. As it breaks those highs, it comes back, makes a new high, and it breaks those previous lows, which is an area of demand. That's why market structure is an important technique to understand when you're applying this to a price chart with using an area to look to draw supply and demand zones. So that is a brief insight to how to draw those areas of supply and demand. Now, with the first video you went through, you already have a good idea exactly how to do that. Now, what I suggest is to go away and test and practice finding those zones and drawing them on your charts. Once you've mastered understanding how to draw those zones as you go with a trend, as it reverses on a trend, then that's the first step of you mastering with supply and demand. Understanding how to draw those zones. Now, I hope you've enjoyed today's content. And if you're not already subscribed to the channel, don't forget to subscribe to the channel and hit that notification bell, because then you'll be notified once that next video comes out very shortly. And I thank you for watching today, and I hope you've had some good education from these previous videos to start with finding and drawing those areas of supply and demand on a chart.